Good morning, ladies and gentlemen. Mr. Avenger, how high we going? Well, in theory, we shouldn't be going up because the market is bearish currently, but maybe when it turns into a buy signal, we can be going up. Where have I been? Not streaming, that's for sure. No, just working on my rental property. Some days, like, what was it? Was it Tuesday? I mean, yeah, yesterday was just kind of a day I'm like, I don't, just based off the early morning action, it just wasn't anything super cool. So I'm like, there's really no point of getting on stream just to go over a bunch of random nonsense, if you will. But anyways, so we'll go over some stuff today. Today was a good enough day where I feel that it makes sense to come on and stream, give you guys the rundown, help you understand what took place, and so on and so forth. So yeah. Really, all that's taken place today was a back test and resistance. And it's labeled on the chart here. So, again, really the easiest way to explain today, like the dumbest, most simple way of explaining today in so far what you've seen without getting into, a lot of detail, it would just be the market over the past day has bounced back to the over-under bullish, bearish trend level and decided to stay bearish. That's it. That's literally all that's happened. And of course, there's other things, but really that's all that's happened. So, it really only takes 3 seconds to explain what's happened in the stock market on a stream to a degree. But yeah, so today was just simply a back test into resistance and market stayed down. And before I continue, we will actually bring up this here. This is the old, which I could have just hotkeyed that. I should have just hotkeyed that, but anyways. So this was I posted earlier on Twitter so that you guys know really, what we talk about is never different. So it's not like, what we're saying on stream is different than what we would say on Twitter versus what we would say in the chat room, like the old saying, if you had a subscription service, you could send half of your followers to go long and half of your followers to go short, and 50% of them will be right and think you're a genius. The other 50% will think you're an idiot, right? So that's kind of the old saying of like stock market, predictors and analysts is like just tell half your followers one thing, tell the other half the other thing, and one of them's going to be right, and so half of you think you're a genius, half think you're not, right? It's kind of an old saying, an old joke in the market, but so always keep it consistent in what we say and what we do, really, in that regard. So, again, if you look here onto Twitter, oh, that's wrong. It's the other one here. So this is the first post on the day, 9:29 a.m. right in the morning. Market is flirting with the 50 SMA. Keep tabs for acceptance above or below. If accepts above, buy signal may start. If only for a short-term buy signal. Obviously, if not, acceptance, market just rolls back to short. So either above or below, right? So it's either going to be a buy signal or short, which sounds dumb when you say it like that, but that's really the truth. That's just what it is. And so 9:30, we basically say you're looking for acceptance above or below the 50 SMA. What does acceptance mean? Acceptance would just basically mean which side is the market picking. The only way to really determine that for the most part is going to be momentum metrics. So people could look at RSI, MACD, market internals. So generally it's going to be momentum metrics that would help you gain confidence on one side or the other, along with maybe different, levels that you think are going to be magnets. So kind of give you an idea that way too. But ultimately it just comes down to momentum. Yeah, exactly, Pete. So here it is, right? So that's the 50 SMA today. So when you think back to the tweet at 9:30, it says you're looking for acceptance above or below, all right? So we'll try to keep it simple at first, and then I'll kind of dive into the more advanced stuff, if you will. So let's say acceptance above or below. Well, let's look at this. The market internals page. All right? So as soon as the market opens today, what happens, right? These are all the markets that I watch. I'm not saying that these are the best to watch. I like them. There's probably other things you could watch that may give you more edge than this, but ultimately this is what I look at. I look at a 6-screen chart, volume, and markets across NASDAQ, NYSE, and SPY, and what have you. S&P 500. All right, so what happens early in the morning? I'm going to zoom into all these a little bit. All right. So when you look at all of these kind of zoomed in, you know, the NASDAQ starts with a little pullback and then a little up. NASDAQ 100, little up. Or sorry, the FANG, little up. NASDAQ 100, little up. NASDAQ flat. NYSE, little up. S&P, little up, right? So right in the morning, you start with a little long bias because most things are kind of on the push. They're not flat or down, okay? And then shortly after the open, they all turn to down for the most part, right? If we were to enlarge the screen here, maybe, there you go. So early in the morning, it starts with an up, then to down, all right? Go over to your FANG, which usually the FANG are a pretty good predictor of the market because they pretty much control everything, right? These had a little pullback to start, then an up, then back to down, and then so and so forth down, all right? You go up here to your NASDAQ 100, little up, then down, all right? Go over to just the NASDAQ in general, advancing declining issues, flat, and then just down, right? So ultimately, the open wasn't very bullish. It was slightly bullish, then just pretty much straight to bearish, okay? So let's take the slightly bullish, then to bearish narrative and apply it to acceptance above or below the 50 SMA will dictate your move. So if the market accepts above the 50, we'll start long. If the acceptance remains below the 50, it will just be a rolling short, all right? And then you go into the open and you see your market internals. Your market internals start with a little long and then all flip bearish. And then hindsight 2020, what do? You get a market that starts with a little bullish into your over under. And then as you reach it, the market and all of the issues across the market go, nah, bearish, right? So that would be the acceptance kind of market staying bearish below the 50 SMA. That'd probably be one of the simpler ways you could kind of teach that for the day. And so on and so forth. Now, here's another one for you. How could you have maybe had an idea that without even looking at the market internals to have an idea that things would have started up in the first place, right? So there was a way, at least that I would think of and use today. We did use it. I'm sure there's someone in here from our chat room that would confirm this, but to start the day, we were long bias actually, then flipped to short bias. But part of the reason to be long bias into the open today was because, let me go to SPX here. I'm going to start fresh with some of this stuff. Was this, right? So both SPX and SPY, but anyways, right? So, and maybe I should start with the SPY here. That might be a little easier. Coming into the open and like right before the market opened, pre-market, the SPY and the 50 SMA were just below the 50 SMA. So that means there was a little room to run to them, right? So something that we always look for is that at market open, kind of depending on the situation, but generally speaking, at market open, you're always looking for what we call a live tag of a level. All right, so let's get to the pre-market real quick. So what I'm going to do is I'm going to highlight on the chart the 50 SMA with the horizontal line right there, right, overlapping the 50 SMA. We're going to go back to a pre-market chart. All right, so you guys can see, and I will label this real quick. So this is 50, oops, sorry. Or not. There we go. This is the 50 SMA. So you'll even see in the pre-market session, what do? Come up to it, back test, resistance, data comes, plows the market into it a little over, blah, 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 blah. Right? So during the pre-market session, the market was hitting the 50 SMA, rejecting. Hitting the 50 SMA off data and kind of rejecting, right? But that's during the pre-market. That is not during the live trading hour session. So during the live trading hour session, we were looking for the markets to at least boost up to test the 50 SMA. And from there, we would look to determine acceptance above or below. So even before the market opens, and you can see market internals for the day, we were looking for the market to go up so that we could at least see a live test of the 50 SMA, at which point then we could get into the determination phase of acceptance above or below, which many times will come based off of market internals. All right. Not only were we looking for the markets to go up because of the live testing of the SMA, we're also looking for the market to go up to start in the morning because SPX, again, opens with a gap up. So when we're opening up with the gap up, a lot of times we're going to look for the gap to 161 extension. So if we run the gap and go, or the gap extension 161 concept, that would mean our first desired move based off of overnight impulsive moves based on the gap would be the 161. So that would be right there. I'll move it to a 5 minute or a 1 minute or something like that. So going into the open, before the market opens, we know it's a gap up. We know that the SMA is so close that it would make sense to go up and give it a live tag. All right. So that's kind of, and there was some other things that my business partner Brandon was watching and so on and so forth, right? So those are the things that I'd be paying attention to more closely. So those would be like two main things that would drive me to want to look more to the long side going into the start of today. One, being so close to the 50 SMA, looking for the live trading hours test. Two, well, that was 3 fingers, but two, yeah, we're opening with the gap up, so you'd naturally be looking for gap moves to start. All right. So you'll see that we actually shy the 161 by a little bit, but we pretty much go up and get it, and so on and so forth. All right, so that's how you could have been leaned long bias to start kind of into the morning. All right. As the morning opens, the market internals pretty much all go bearish. Therefore, you could be more bearish into the market, right? So that's pretty much it. There's a bunch of other little small nuances in there, but I mean that's really it, right? So again, we'll just get back into we'll go to a regular trading hours chart here. So as you can see, right, the 50 SMA would be right here. Oh, that's SPX. I'll go to SPY because I know more people would look at SPY. So we'll go to this here. Oops, sorry. Right there. All right. So there it is, right? So we'll go into a 1 minute chart. And what's the market look like, right? So the market looks like into the open, it kind of pops up, tests the 50 SMA, has a rejection, bounces up, has some more rejection, right? And if you look at, we'll just bring up the FANG here. That's all we'll look at for this. If you look at the FANG, if I bring this over, make this chart a little smaller. All right, so what do the market internals look like? All right, if you look on the left chart, market internals start down, up, down. All right. What's the market do? Down, up, down. All right, so as the market is testing the over-under, meaning, again, above can be bullish, below is bearish, you look at your main drivers of the market, which are your major market cap players, and they are having resistance coming into the 50 SMA. You can see that the market is not running bullishly, and if you look down at the bottom of the screen where I'm going to put this arrow, and I will change the properties of that guy. Oh, it is extra large. There you go. Right where the arrow. You can see that the MACD on the FANG turned bearish right at the top of the market. So behind the scenes, all of your FANG are, not all of them, but across the board as a average, the FANG are getting bearish right into your over-under bullish bearish level. All right. So that would kind of be that. I mean, I wish there was more, but there's really not. I mean, that's it. That's how you can predict a market to a degree. We weren't looking at bull flags. We weren't looking at double tops. We weren't looking at head and shoulders patterns. We weren't reading the news to see if Trump said something bad or if Jay Powell said this. We're just looking and reading the market in real time. That's it. We're paying for a news service. Definitely not looking at Benzinga for the answers. Yahoo Finance, CNBC, some kid's Twitter page. Even though I'm on Twitter, it's kind of funny. So yeah, I mean that's really it. I wish there was more, but there isn't. Actually, I wish there wasn't more because it makes it simpler. Yeah. So that's pretty much that. A little bit more to the story. Volatility index. here. This is something else we're looking at. Volatility index, obviously above or below the 50 SMA, right? So if below, market can go up. If it's up, market's more likely to come down. The volatility index didn't play that cool today, so it's kind of neither here nor there. Markets kind of moved on their own accord today using market internals. Arguably, that's because you have CPI coming out tomorrow, so obviously volatility index is going to kind of just hang out till tomorrow. Probably hang out near the 50 SMA because we know there's implied volatility coming into the market tomorrow based off CPI, so volatility is going to be up. And so, yeah, so really the market today was just a pop to short, right? Now, so yeah, again, market was just a pop to short day. And when you go, after looking at all of that, we have a little bit of a gap up. That's why we could go up a little bit, right? We have market internals that are getting bearish into the over-under, et cetera, et cetera, et cetera, right? Hindsight 2020, when you just look at your 30-minute chart, okay? When we look at our 30-minute chart, 50 SMA, right? Question is, what do we actually have? Delete this off. Oh, so what you're saying is the market was started going bearish on Tuesday, January 7th, and today was just a back test of the SMA trend and stayed down. That's it. Right? Literally, that was it. We started a bear market on Tuesday, January 7th. It's now Tuesday, January 14th, and the market is still downsided below the 50 SMA. But the 50 SMA also determines whether it can be bullish and bearish. Literally, it's one SMA that dictates up and down in a macro environment, right? So when you come to it, you have to then look and go, well, is it going to stay downside? Is it going to be upsided, etc.? And the only real way to do that is looking at market internals, looking at momentum things, and so on and so forth. And obviously, whatever else you might use to determine price targets for a day, right? That can be helpful as well. But again, hindsight 2020, keeping it super simple, it's really just a breakdown and a back test. That was it. That's literally what today was. So if anybody is saying something different in the market, I have no idea. I'm not really sure. Yeah, that's pretty much it. Now, I will say this, right? You can already see, right? See how, like, look at this pop, right? See this left, like that right there? Someone today is going, oh, we're stopping here because if you look left on the chart, there was resistance. So we came down here. So today we're coming up to it and we're having resistance there. No, not it. Nope. We're having resistance because the market wanted to stay below the 50 SMA and stay in this negative trend. It just so happens that the SMA calculation and the live test of the SMA today happens to be or correlate or make an equal price point to, at one point, a lower high here. So one will think by looking left, you got resistance based off of previous resistance, and that's just not true. Okay. Adam, bearish. Yes, the market has been bearish since Tuesday, January 7th. And today we got a back test of the 50 SMA. Therefore, we were bearish below it today. Does that mean that the market is going to trade bearish for the next couple of days? Have no clue. So just think of it this way. Back here was the start. So if you're trying to be bearish for like swing trading everything, that was the start. So you're clearly not early. You're definitely late. At this point, you would just need the markets to continue going down. Right? Do they do that? Again, I have no idea. I'm not one to, oh, market's going to stay bearish. No, I just go based off of, is it below? Yes, deploy bearish stuff until you're back to bullish, right? Yeah, definitely. Definitely Lord Autism. That's a good one. So, yep, that's it. Also, yeah, Bitcoin obviously into resistance here. This is probably about the same time a lot of the main Twitter pages on Twitter are talking about the market pumping, so it's probably going to go down now. But I mean, yeah, it's pretty straightforward, guys. Again, we came into daily resistance. This would be one of our daily targets right there. So that would be our one of the long targets. I mean, it really is the long target for the moment, but that would be your long target. Yellow box here, down, data pop, roll down. There's a good chance that by tomorrow there's a good chance by tomorrow you're going to see a red candle print onto Bitcoin. Yeah. Obviously, CPI might throw a wrench in there, but ultimately, let's take CPI out of the equation. You would probably see a red candle print into tomorrow. That's obviously on the assumption that it's going to stay bearish. Obviously, if it didn't, then it wouldn't. But ultimately, it's a good chance we can see a little bit of a red candle into to Bitcoin tomorrow, as long as it doesn't sell off too much before tomorrow. Because if it sells off too much before tomorrow, then most of the sell wave is completed, and so on and so forth. Nice, Adam. That's great. I think it's a fantastic idea. SPI Energy went from 121 to 1 from 80. Nice. That's awesome. I wouldn't even say I'm the biggest bear of the market. I mean, it just so happens, I guess kind of, I would say there's probably not many YouTube channels that flip from bullish to bearish as frequently as I do. I would say that's probably for certain. But yeah, here's another little something. You can see the volatility index is over the 50 SMA right now. So, but again, that's kind of normal leading into CPI. But that probably tells me that markets are probably still shaking down. Yeah, pretty straightforward stuff. Yeah, I don't really have much more to say. I mean, that's pretty much it. So, if you guys want to, chat, feel free. I will say today wasn't, the easiest trading day, but ultimately it wasn't bad. I mean, yeah, we could cover stocks, but again, I'm not the greatest stock analyst, if you will. I'm okay, I guess you could say. But again, it's always the same story, right? There's really no point of me even doing. Is the market on your stocks above or below its short-term 50 SMA? If it's below, it's bearish. If it's above, it's positive. So if you look at Apple, again, same story. Ready? Apple down. There you go. When it gets over, it's going to go up. It's pretty straightforward. It's not so straightforward in the immediate of it happening, but that's really just it, right? Look at NVIDIA. Is NVIDIA above or below its 50 SMA? Below, down. All right, cool, right? Below, down. That's literally it, right? Microsoft, below, down. Okay, Google, below, down, right? And you can see why your markets are selling off too, right? All of your major stocks are in downtrends. And your market's in a downtrend. AVGO, it's always the same thing on repeat. So there's really no need. Long term, I have no idea. I don't do long term stuff like that. You'd have to know the company, how much money they make, are they growing, all those things. So if you want to buy things long term, then you really should sit down, take a look at the financials, and then go from there. And then the reality is most people, as far as picking long-term stocks in general, don't beat the market, So you could sit there and do a bunch of picking on individual stocks and then most likely underperform the overall market. So yeah. I know, I'm sorry that wasn't more entertaining for you, but I mean, that's the reality. And so it's not like I'm going to sit here and go look through the financials and be able to give you a straight answer. Where my best work is done is, again, on Bitcoin, SPY, NASDAQ, things like that. And then deciding whether or not in the macro, in the short term, the markets are going to trade bullish or bearish. And then from there, picking where they're going to go for the most part. That's where I know my stuff. I'm just not a long-term guy like that. Obviously, there's a lot of hype on AI, which means that's a good long-term thing, but not now because it's so hyped up. Quantum computer space, things like that. I mean, really the story always comes down to long-term investing, comes down to companies with a solid moat and positive cash flow and cash on hand. That's pretty much always the story, or something that's so groundbreaking that without a doubt it's going to create a bunch of cash flow in the future. That's and it sounds dumb saying it, but I mean that's really the reality. The only way a company becomes big is if the company can suck dollar bills out of a lot of people's pockets in the economy, right? So then the money flows from one space of the economy. So we'll just call it, for fun, everyone that spends all of their money at McDonald's decides that they no longer want to spend their money there and they want to spend it at this company creating quantum computers. So then all of the money that was going here in the economy shifts to here, right? All of the money that there is and is available is all of the money that they print and that's in people's pockets and accounts. So wherever you think the cash is going to flow to, that's really what it comes down to. Puts are going up. Well, I mean, that would kind of make sense because, market's currently going down. So I would agree with that. That does kind of make sense. Oh, there is something that I did miss that we're supposed to cover, which I also think that the market's going to try and come down to here as well. I think that's kind of potential for today as well. But the reality is the market rejected the 50 SMA off this high here. I'll change this VWAP to maybe red. Yeah, we'll do that. Beat red. We'll do yellow. Sounds good. So, wait, that's not right. There we go. Yeah, so again, as long as the market's below this yellow trend, the market's bearish. I mean, that's in the micro and in the day, right? What I want you to think about is look at where the market rejected the 50 SMA, okay? So what's the story we talk about? Above is bullish, below is bearish. So if we look at the last moment that the stock market interacted with the 50 SMA and decided it wanted to stay down, remember that's the people that decide the market to be bullish or bearish on the 50 SMA is probably, it's probably 95% computers and high frequency trading and algorithm, right? Algorithms. 5% is probably traders like myself, Brandon, etc., right? Really knowledgeable, been in the game for a long time. Your beginner, generally speaking, they don't even pay attention to this. They have no clue it even exists. So again, most of the determination of the market staying bullish and bearish around that 50 SMA level has almost nothing to do with retail investors. Almost nothing. Well, I'm a retail trader, right? Obviously, right? Retail investor. When I say that, we're talking like absolutely brand new people to the market, right? When we refer to retail in that way. So we know that the volume and the action that's picking direction or moving the market away or breaking it away from that 50 SMA, 95% computers and algorithms and, deeper, more knowledgeable market participants, right? And algorithms, right? So that's why I like to track the 1 minute volume weighted average price from that rejection, because I know that this rejection, this downtrend is not created from the retail investors. That's created from the 95% algorithm, call it algos, and maybe the 5% of veteran participants. I want to know that trend, right? So yeah, I mean, that's pretty much that. So then, well, I guess another good way of saying that is take that rejection at the 50 SMA. Let's just say, for funsies, right, to emphasize the point that the market is controlled, which it pretty much is, 100% by algorithms, right, in high frequency trading. So let's just say that this rejection was 100% put in by big guys, banked, high frequency trading, algorithm, whatever you want to call it, right? Then wouldn't you want to track them? Right? Wouldn't you want to track the volume weighted average price of the algorithms that control and dictate the positive to negative movement above or below one specific simple moving average? You would. Right? But that sort of in-depth thinking usually goes well above a lot of people's heads. And they're too busy but it's okay. It took me a long time to develop this style of thinking. I remember when I first started. I mean, it was, you got to look for a bull flag. You got to look for a head and shoulders. And again, that's simply just mostly not the truth, right? It's usually leading you far down the wrong path. Oh yeah, so back to that. So and then, do you see how clean this rejection and short is right there? You see that, right? Arguably here, but really that one. You see that leg that follows after that? So let's just say, because it is the reality, right? At the very top of the day here, algos decide, nope, we're going to reject the market and keep it bearish for the day. All right? Then this would be the VWAP, the back test of the algo trend that wants to keep the market bearish. And then here is your move that follows. Right? So like a lot of people talk about the volume weighted average price per day. Look for back tests there. Look for bounces. Look for rejections, right? So I use the VWAP, but in relation to where I think algorithms are sometimes topping the market, bottoming the market, or picking trend change in the market. Starting points, right? So you might look at a regular VWAP for the day. I will look at VWAPs where I believe that algorithms are defining the markets. Hence why I'd anchor there and you see the bearish trend control there. Do 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 do. So yeah, this would be our 30-minute pullback target. Not that I didn't really discuss it today. It's just, again, there's so much strategy that we have in mind and use. You just can't simply say everything all at once. You confuse a bunch of people, but like these are just all the things that are always ongoing and what have you. So if the market isn't total garbage today, then, you would expect a bounce kind of in this area. I always like exact, so I'd really rather go down to here than get a bounce, but, it probably won't do that now, because I said it. Yeah, Lord Autism, yeah, we didn't really talk about the rejection of the 161. today, but that's always kind of in the back of the mind, right? So if we're gonna gap, so like say if you're gonna gap, yeah, you're gonna gap up, right? And you know you're thinking maybe it's gonna gap up and then fail, then yeah, the 161 is always gonna kind of be kind of one of those areas in the chart you can imagine that kind of starts it too. So yeah, that's always in the back of mind. If it's gonna be a successful long day, then the 161 isn't gonna top the market per se. But if it's gonna be like a gap fail to really go, then yeah, a lot of times that 161 will be one of those rolling points for the market, and so on and so forth. This guy, what are you doing? You're probably going up to, probably already did it, maybe not, I don't know. So like this is like an untested leg right now in the market. So the market has been kind of playing the cleanest with the 1 minute systems the past 2 days, but that's going to be a back test target for the market. So yeah. Oh, I'll be right back. I'm not going anywhere. I'll just be right back. hopefully everyone had a good weekend, I guess. Was it Tuesday? Yeah. Yeah, so again, really just everyone buying into this little bottom, looking for the retrace, just washed out. Down into the lower half, like we said before. So yeah, I mean, that's that 30-minute level VWAP we're talking about. Arguably looking for a little bounce in that area. You can see there's that basically straight move down, wicked, green candle up. It's pretty straightforward stuff. And then you can see I've actually moved. See how, well, it's not that this isn't still valid. It's just going to be used at maybe a later point. So whenever you get kind of like a break scenario like you just did, 1 second. You can see how this bottom consolidated then just dropped out. When that happens, I like to anchor the breakdown of that. So, because you're kind of think, right, everyone that was longing this bottom stopped out. So using a chase down approach, which would be the volume weighted average price of everyone's stop out there. So a lot of times what you'll get is like a bounce back into that area instead of all the way up here now. Anyways. Then again, like I said, market is in a macro bearish environment. And I said if the market is kind of cool, maybe it holds a little bounce here. And that's all based off of, again, it's counter trend trading in a bear market, right? So we're just taking this last bottom in the market, running it forward. And that's a potential area of support. But clearly it's not working too well. At least yet. That's interesting. Is that a gap? Hold on. Where is... No, common. I guess there is.
Bear market. Are you serious? 5% move and you talk Rublini. You're just unfamiliar with the systems we use. That's all. I guess, I don't know, you tell me. Is the market trading bearish or is it trading bullish? Is this a lower low, lower high, lower low, lower high, lower low? That's an equal high, but still a lower low. That is what we would call a bearish trading market. If you want to, which is actually completely okay, right? If you want to determine a bear market by like being down, say, 10% correction, then yeah, you're correct. That's what most people would consider a bear market as it relates to mainstream talking points, right? What we refer to as a bear market is what is the market currently doing? What is the current trading environment? The current trading environment is a lower low, lower high sequencing because we are in a bearish trading market. So just two different ways of looking at it. The other thing too is, right, since the what is that? Was that Tuesday, January 7th? So since Tuesday, January 7th, we've recommended that the market is in a bearish market. So since Tuesday, January 7th, the market has gone down, right? It hasn't gone up. Therefore, anyone discussing bull market has been wrong for the past week, right? Because we're not in a bull market in the macro short-term environment. Which, generally speaking, is what you need to know for short-term active market participation, and so on and so forth. Nice little bounce off the bottom. Woo! Who would have thought? Who would have thought? Back to our breakdown level. So again, you see how we use the you see that shelf dive? How everyone was buying the bottom in here? Not everyone, but everyone buying the bottom stopped out. Take that VWAP, ran it down. There's a target. This was a 30-minute, so 30-minute level used to backtrack a 1 minute. So using a larger time frame level, small bounce to backtrack the micro breakdown there. So that target's complete off that low. If we're lucky, it bounces more. Again, market still, where's my VIX charts? These must be it. I'll bring those back up. Yeah. But anyways, yeah, market's still in a bear market. Nothing's really changed. Again, these are just kind of random levels we're picking off lows that, again, most people probably don't watch. Which actually brings us back, I think, to the last week when I was streaming, maybe, how we're talking about when the market is in a bearish market and selling down, right? The only things that can change its direction is going into a buy signal or some sort of random support off the low, right? Oh my gosh, the market's bouncing. Who would have thought? Crazy. Just crazy. About to go up and get the next target. Whee! Which is that yellow box, obviously, for those that aren't familiar. They could shy scam it, but, you know. And that, ladies and gentlemen, is how you do foresight analysis. I would call that foresight. Would you guys call that foresight? I think that's what that is. Or maybe it's really just the market goes up and goes down, so eventually this is going to run into shit you put on your screen. That's it. Whatever, however you want to look at it, however you want to look at it. The bouncerooski at a random level. Love it. Good stuff. Good stuff. I mean, there's a couple different ways you could look at it, right? If you want to do it like this, like think about it like this, all right? You know that there's someone who does stuff like this. All right, let's see. Can I do a pitchfork on this? Maybe I can. Let's see. Kind of. Not really. I'm just going to draw my own cool trend lines. So we'll just draw one like this from here to there. All right, so someone did that at some point. All right, you could think about this, right? So think about the market was going up and then it tops here, rolls, breaks down, right? So you know that there's a trend line break there, a volume snap, whatever, right? You could even choose this as an anchor point and be like, okay, the market obviously kind of went from this little bullish up move to bearish, snapping down, hence all of the trend down volume weighted average price, run up back test, right? That's one way to kind of look at those things. All right, micro targets complete off 30-minute long supports. That's done. Now, if we find micro resistance, which I'm not sure if we will, but we will be looking at some point, when the market wants it, we're going to be looking for back tests of this now. Pretty much here, I would take that guy, this guy, and I'm going to take this big guy right there. Which this one's kind of spread out. It's not the most ideal kind of situation, but yeah, now we'll be looking at some point for back tests to here. So, we had oversold support. Oversold support, bounce, backtrack, micro trends. Now, the micro trend created off this low. So everyone buying into this bottom and driving up this move, I would say, has kind of like a volume weighted average price structure right there. So markets, not all the time, but normally are going to want to back test that and say, hey, everyone who thought they bought the bottom, we're going to whack you real quick, and then maybe we'll do a higher low. That's pretty common. But in the event, the market's too oversold, it just runs away, and so on and so forth. You guys get the point. Ugh. I mean, CPI could be terrible. CPI could be good. What a bouncerooski. All for free on a YouTube stream. Who would have thought? The only reason it works is because we can't have too many people in the stream. If we had too many people in the stream and they were all buying this bottom, then the market probably would have just whacked them real quick, right? But we know that most people are, since most people, are probably on the short side coming into support, we could give them a little rippy. I'm gonna take off that. Don't need that no more. Don't need that no more. Go to Feynman. And we are going to take this guy like a this. We're going to run that guy like a that. And then that would have been a 30-minute breakdown prior. Go like this. And yep. Cool. Nice. Yep. So now, kind of anywhere into that area probably going to have some resistance. Appreciate you, fam. Do be careful. Again, they could, like I was saying, could just easily run it back down into these 1 minute trends because, again, that's pretty straightforward stuff. Right now, I can already see it. It depends, right? So if this is gonna immediately drop out to here, it's gonna have to take out the last higher low volume weighted average price. Ready? I'm gonna throw a VWAP right here, and that's gonna be the bottom of this red candle. Wait, hold on, I did it wrong. 1 second. Ready? See that? Boom. Right there. See, I could visually see it. You see that? See how the market bottomed that candle right there? Because that is the last dip, run up, dip, right? So the best way to understand that is think about somebody who shorted this top, right? Shorted right there. And then get squeezed out. That means they're red. And the only way they could get back to positive is getting below that low. So the market, instead of letting this pullback go below that low, letting them go green, it will pull it back to the volume weighted average price just above that, then pop it, etc. You know what I'm saying? And that's how volume shelves are created in real time. Is, again, if you were short, then you get squeezed. Instead of going back to your average right away, a lot of times they'll do a little higher low, pop it, etc. And that's how they create the stair steps up. So I know someone in here has been on the wrong side of a long move and they've been shorting, right? So you short a top, right? And then it goes down and then it goes back up. And then say you short it again or whatever, and it just never quite gets back below your average. That's because the market is stair stepping up based off of volume VWAP created from previous market participation. So that's kind of the reason why you always feel like it's almost like the market always knows where I entered or where I want to get out, etc. It's because the volume weighted average price of your participation in the market is what's creating the market, right? The market that's to come a lot of times has to do with all of the participation in the market beforehand. You and your participation is what's creating the forward-looking market. Honestly, I should start an OnlyFans. No, I'm kidding. All right, so to get down to what we were just talking about, the start of this box, we're going to have to take that VWAP out. So I'm not saying that that's like the goal right now, but that would be the goal if you're trying to go to here. Which this one's kind of dangerous because I have the market up as high as to here / here with also the market down to here. And right now we're in the middle. So the risk is kind of like skewed a bit, right? It's not, you're not at a tippy top, you're not at a low, you're in the middle. And so the market will pick whatever way it wants to go here and break the market to either one of those targets based off of who's been participating, like right in this area. Which, by the looks of it, looks like the shorts are going to get taken here and the bounce is going to continue. But, yeah. Also, the VIX is currently pulling back, so that's not helping. Oh, duh. Did we just hit the 15-minute trend? Durr. Wait. Yeah. Could have had more confluence on that bounce if I was looking at that, but anyways. Boom, boom. Chicken dinner. Ba-ding, bing, bing, ba-ding, bing, ba-ding, bing, 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 ba-ding, bing, ba-ding, bing, bing, bing. So we're kind of getting a little bit in. It's debatable. I mean, I don't think we'll see. You never know. But we are kind of coming into a little bit of 5-minute resistance in this area and 30-minute resistance for back test as well. So, but again, like I said, it could easily stretch up, even higher than that. What time is it? 12:18. Okay. Yeah, just be mindful again. If the market's to hold some kind of resistance in this area, might come in like the next minute or so. Boom, baby. Boom, 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 chicken dinner. Well, I wouldn't really call it chicken dinner. It's just one little tiny candle, but And you still got, let's see, 12 seconds, 12 seconds, 10 seconds, 10 seconds. Come on, there it goes. That's what I thought, sucker. And we're on to the new 5-minute candle. We kind of already stretched that one out pretty good, though. Again, same story. Look at where we're at. Ready? So see how, again, this is where it might dive. Hopefully it just dives out. There it goes. Starting. Dives out down to like, 579.45, and if not a little lower. There it goes. Boom. And you see how we're kind of doing it? Boom. There it goes. Like I said. Anyways, and you see what's happened, right? So after we've run up enough, you see how we took out, I'll zoom in. I know there's a lot of yellow lines there. I'll turn this one to green. That's what I thought, baby. Is what I thought, dog. Where the hell? What am I doing? I don't know what I'm doing. I've never done this before. That's kind of hard to see because yeah. I'll make it blue. That's kind of hard to see. They're all hard to see. Anyways, but you can see, again, this blue line, how we kind of stair-step this one up, right? And then, boom, there it is. So there's the box on the bottom. Job well done, folks. Job well done. If you were short with that, you should take that off. Should close that out, baby. And actually, might even pop back into a little bit of a long pop. Might be a little too soon for that. Probably is a little too soon. Anyways, but yeah, so you can kind of see how we kept some resistance up here, and then this little blue line, how we were kind of stair-stepping the action there, how we finally gave it up. So everyone that had kind of been buying up this and this, they stopped out, right? So we took out that little mini up consolidation top, and we used their volume break to send the market down. Now you got to be careful of a little bit of a scalp bounce in this area as well. Might need a little bit lower there, but ultimately, yeah, just be mindful. And if it to work. I'd say if the market catches any little micro bids prior to lows, and it will try to backtrack somewhere up here and basically screw over that last selling leg. It's typical. Definition of a split candle. I don't actually see one for the I guess a lot of people define it differently, because I kind of think about split like when it splits down or up from a bottom. So I would, like, in this micro chart here, I would consider this right about here what I would call like split supply or demand, kind of like right in that area where it's down and then it kind of zink up. That's what I would kind of think about it as. Or even like this one here. Right here. Like this, where it's down and then that transition on the 1 minute there. Yeah, I mean, everyone kind of defines a little differently. I could probably find one on the 30 minute as well. Let's see. That, right, to me, that would be like split right here. Split demand on the 30 minute. These two right there. Where you can see that it's almost like the candles just like sit right on top of each other, where it's like one closes, the next opens right at that body candle high or the high of the wick, and then right up. So I would call that split right there. Hey, micro target hit. What do you know? Whee! So you guys can, and it's not always like this. Sometimes things don't hit as quickly as you've seen here and react as good as you've seen here so far in the stream, but generally that's what the market is. It's a back and forth game of just screwing everyone over that previously traded in the market. Like, that's literally the market's objective, right? You see how the market bounced, and then we come up, and then we slam down. So everyone getting long then gets screwed, right? And then it comes down, and everyone getting short then gets screwed, etc. That's literally the name of the game. So when you think of the market in terms of trying to screw everyone over that previously participated, it starts to become easier to understand what's happening many of the times. Right? So if this little yellow box, we were targeting back on this little scalp long. Why? Because this leg, right? So everyone's selling this leg down. If you bounce the market here, they're all going to be pissed off. It's gonna piss them all off, right? Hence the name of the game. Because everyone who's short chases it down and then poof, squeezed out. And now we'll probably do a little bit of a micro lower high if the market wants it, of course, right? The market wants to stay bearish. In the micro, this would be a lower high attempt phase. So just as everyone gets short, squeezes them back, they close out, and then if obviously market wants to continue, this is where the lower high would happen. We're getting a little low, and it's kind of late in the day, so things may not work as cleanly, but you get the point. You guys know it's the market. Wait, see where it bounced to the left of there is a different type of split. The red candle and the huge green candle. I'm assuming you're probably referring back to the 30 minute. I'm not sure. You could send it to me in Discord real quick if you want, what you're talking about, and then I'll take a peek at it. Whoa. Oh, by the way, kind of forgot, right? So then this is a little micro leg, so I'm going to take this micro leg and we'll repeat the same process. Below,
go up here, 1 minute split. So then the target of this little roll would be right here. Damn it, stupid arrow. Who wants that? No one. Yeah, the target of that roll would be to here. So you can see you're starting to get kind of some compressed price action. It's like, okay, so if they're going to lower high here, then it would be the micro targets there, and is it worth it? Da, 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 da. You get the point. So and then everyone that failed the lower high here gets squeezed out. So then we track the volume from this candle breaking up and this low, right? So then it would be here. And then we'll wait for that trend to develop. So now this would no longer be on the screen. That gets taken off. We've taken out the top down here. That's done. Boom, boom. And now the chart would look something like, you know, kind of like that. Anyways. All right, and so now do you see how your higher low is developing off the bottom, right? So big bounce, pull back, higher low, right? And all of that other stuff we did in the middle is just all the micro. Right? Now, look at that's your WW kind of situation. Up, pull back, higher low, bounce. Two candles that overlap and don't have wicks. Yeah, send a picture of it to me, if you will. I mean, you can see it right there, right? See where this little red pullback went to? You see how we took that last low, and then there's your view at, and there's your pullback to it, etc. It's very micro stuff, so it doesn't look anything like super amazing, but you get the point. And that's done. Now, someone could simply go like, oh, well, yeah, it's just going to go back down to this little demand spot, but that's not always how it's going to look. So... anyways, I think that was a good enough stream. I got some other stuff to be doing today. That's enough predicting the market for you guys before it happens. So, anyways, cheers. Have a good one. Links for all the cool stuff are in the description. Catch you guys later.